First, I just want to get your take on the German economy, because questions are starting to be asked whether we're finding a bottom in the global manufacturing cycle. Do you think we've hit a bottom in the manufacturing sector in Germany?
Well, I cannot talk for the whole German industry, obviously, because it's also chemical and other matters and automotive. So what I can do is I can talk about my company and the space and the verticals we are in. And obviously, we have seen quite a decline on the industrial automation space in the short cycle environment, mainly the discrete factory environment associated with the downturn on automotive and tool making. So from what we believe we see is that this is leveling out over the next 6 months, while our customers take charge in innovation and shifting to products which are well demanded in the world. The big question will be, is there going to be a solution on the trade war activities? How will the Brexit turn out eventually? So there are a few uncertainties. On the other hand, we believe there is enough strength in the German economy to get this one right, especially on the export factor. We see economy still growing. We see China seemingly, with some uptick going into 2020. We must not forget about India. It's still 1.3 billion people want to have a better life. So there's a lot of opportunities, but certainly it will separate, but basically the companies which are strong and competitive from the others who are weak, and we'll see some consolidation challenges.
Okay, so how will 2020 look for you then, Joe? Because you said you see the global macroeconomic development subdued in the full year for 2020. Will 2020 simply be a year of transition for Siemens?
Well, I wouldn't call it a year of transition. It is a year of optimization. We've been coming a long way. If I just think back when I took over in 2013, the company was at 6-7% margins. Now we are at about 12 underlying. So a lot of things have happened. Now we are focusing this conglomerate into a very structured three-company approach, which is healthcare, industrial and energy. We have announced just recently that we are going to spin off the energy business. We created a new company now. It's called Siemens Energy AG, which we bring to the shareholders and to the market in September 2020. And that's very exciting because we will see more focus, and we do expect a re-rating on the stock because of the massive conglomerate discount which we have. So now coming back to what you said on what you called a careful or subdued outlook, it's not a subdued outlook. All what we say is in the industrial automation space, where we have automation systems and software, we will see some continued weakness on the discrete automation, which will compensate it fully through our massive and very, very competitive offering in software. So the smart infrastructure, actually, we are saying we expect growth, and the same we expect in energy. So we are pretty excited about what we have in 2020. First and foremost, of course, bringing the Siemens Energy to the market.
Yeah. So, Joe, can I ask then, why did you decide not to give 2020 margin guidance at group level and instead only gave it on a divisional level? Is that due to a lack of visibility?
Well, actually, Naira, in all due respect, the contrary is the case. The contrary is the case. We've had a conglomerate that big, from big gas turbine to circuit breakers to the best scanners and healthcare in the world. And then, as we in Germany say, the average fever temperature of a hospital doesn't help you to cure. So what you want to do is you want to be very specific about industrial, about infrastructure, about energy, about mobility, give transparency to investors what they can expect. And as you have probably noticed, you've seen we still give a guidance on group level in terms of what we expect on top line growth, which we expect to be moderate. And typically people think about moderate in around 2-3-4% environment of growth. We said our EPS is going to be between 6.30 and 7. The comparable number for 19 was 6.41. So we're actually giving all the details, create more transparency about the different businesses which we are running. So I'm pretty sure that investors will very much appreciate the transparency so that they know exactly how we think and what we align our guidance to. And if I say the market will be flat, we talk about industrial automation and not the whole company.
Understood. So, Joe, when you said a moment ago that you expect the short cycle businesses to level out in 6 months, and of course that has been an area of challenge even previous to this quarter, what makes you think that that will level out? Is it all predicated in a resolution of US-China trade tensions?
No, not really, honestly. Because it plays a role, of course, because we are in a capital goods business. So capital goods business is about confidence in investing. And if you don't know, what happens next morning, which tweet is going to come out about what, people are worried and they stay on the sidelines and say, wait a moment till the dust settles and then we are going to invest. So that is subduing the sentiment, definitely. On the other hand, you're not always just looking into political statements and trade wars and what have you, because we are a very, very localized company. We've got almost 60,000 people in the US where we are net exporter. We have 40,000 in China. So we are very localized. So we can actually rely more on talking to our customers rather than watching what the trade war and the associated discussions are all about. And that makes us more confident what we hear and see from our customers, firstly. Secondly, we have had a very, very, very strong fourth quarter. And you just look at the competitors' numbers and then you know what I'm talking about. And then I was, of course, a bit, how should I say that, curious on what the October numbers will be in the sell-through of our products in industrial automation, or whether the distant network is going to sell out the product, and it did, especially in China. And that gives me the confidence that things are moving, and I believe we are well underway to deliver on the promises as we have done the last 6 years, every single year. And you know what? Okay. It's always better to under-promise and over-deliver than the other way around.